This is the biggest wealth transfer opportunity we have seen in the stock market in years, and most people are going to miss it completely. Not because they're not smart, not because they don't work hard, but because they keep making the exact same emotional mistakes over and over again. They chase hype at the top, panic at the bottom, and spend more time listening to opinions than actually building a system. And if you don't fix this right now, 5 years from today you're going to look back at this market and realize you were standing right in front of generational wealth and still somehow walked away empty-handed. So don't click off this video. Don't go check your portfolio. Don't go scrolling social media looking for the next hot stock pick. Just listen carefully, because this might completely change the way you think about investing forever. A few years ago, I talked about a stock that everybody hated. Analysts were mocking it. Financial YouTubers were laughing at it. The comment section was calling it dead money. People kept saying, "This company is overhyped. It's finished. It's never coming back." Meanwhile, the business itself kept getting stronger every single quarter. Revenue growth accelerated. Profit margins improved. Big institutions quietly kept buying. And while everybody else was focused on the falling stock price, smart investors were focused on the business underneath the ticker symbol. Fast forward a few years later, and the same people who laughed at the stock are now calling it one of the greatest opportunities of the decade. Funny how that works, right? And this is exactly where most retail investors fail. They think investing is about predicting price movements. It's not. Investing is about understanding businesses while controlling your emotions long enough for compounding to do its work. That's it. But people don't want boring. They want excitement. They want dopamine. They want a stock that doubles next week. They want somebody online to tell them exactly what to buy so they can feel safe. And that's why most investors never build real wealth. Let me ask you something. Have you ever spent hours researching a company, watching videos, reading articles, checking Twitter, scrolling Reddit, listening to podcasts, watching interviews, studying charts, and then the second the stock drops 15%, you suddenly feel terrified? Of course you have. Everybody has. And the reason is simple. More information does not create confidence. Structure creates confidence. Without structure, all that information just becomes noise. Your brain becomes overloaded. One expert says buy. Another says sell. One guy predicts a crash. Another says the market is going to the moon. Eventually you become emotionally exhausted and start making decisions based on fear instead of logic. Most investors today are not underinformed. They are understructured. That's the real problem. They have no framework, no rules, no process. Every decision is random. They buy because a stock is trending. They sell because the price dropped. They panic because the news sounds scary. Then they wonder why they keep buying tops and selling bottoms. The market is not stealing from them. Their emotions are. Look at what happens every single cycle. During bull markets, everybody feels like a genius. Stocks go up. People get greedy. Social media turns into a giant casino. And suddenly every person with a microphone becomes an investing expert. Then the market drops 20%. And those same people disappear. Fear replaces greed. Panic replaces confidence. Investors start selling quality companies at discounts because they can't handle volatility. Meanwhile, disciplined investors are quietly buying more. That's why the stock market is one giant transfer of wealth from impatient people to patient people. Every single year, every single cycle, the people who stay calm make the money. The people who react emotionally become exit liquidity for everybody else. And the craziest part is that most investors are completely obsessed with price instead of quality. If a stock goes down, they automatically think something is wrong. If a stock goes up, they automatically think it's amazing. That's backwards thinking. The stock price is not the business. A company can become stronger while the stock falls, and a company can become weaker while the stock rises. But retail investors never look beneath the surface. They stare at candles all day instead of fundamentals. When I look at a company, I'm not asking, can this stock go up next month? I'm asking completely different questions. Does this company have strong revenue growth? Are margins improving? Is management executing properly? Does the business have a competitive moat? Are institutions accumulating shares? Is the company part of a massive long-term trend like AI, robotics, cybersecurity, energy, or automation? Does it generate real cash flow? Can this business realistically become much larger over the next decade? Those are the questions that actually matter. Because if the business keeps improving while the stock drops temporarily, that's not bad news, that's opportunity. But most investors are psychologically incapable of handling volatility. The second a stock falls 20%, they forget everything they believed about the company and start acting emotionally. That's why they never capture massive long-term gains. They quit before the compounding happens. Think about this carefully. Almost every legendary stock in history looked terrifying during its journey upward. They all had brutal corrections. They all had periods where everybody thought the story was dead. Amazon crashed multiple times. Tesla crashed multiple times. Nvidia crashed multiple times. Every monster winner in history punished weak hands before creating generational wealth for patient investors. That's the price of admission. Volatility is the fee you pay for extraordinary returns. But people today have been conditioned to think short-term. They check portfolios every hour. They obsess over daily candles. They treat investing like entertainment instead of ownership. That mindset is destroying financial futures in real time. The truth is, building wealth in the stock market is actually very simple conceptually, difficult emotionally, but simple conceptually. Buy great businesses. Keep buying during fear. Hold long enough for compounding to work. Ignore noise. Repeat 4 years. That's literally it. But because humans are emotional creatures, almost nobody can follow that process consistently. That's why systems matter more than motivation. A system protects you from yourself, because during crashes, your emotions will tell you to run. During euphoric rallies, your emotions will tell you to chase hype. Without rules, you become a victim of your own psychology. For example, if you invest every single month no matter what, you remove emotions from the equation. If the market drops 10%, maybe your system says you double your investment amount. If a quality stock drops 20% while fundamentals remain strong, maybe your system says you buy more aggressively. If a stock becomes massively overextended after a huge run-up, maybe your system trims a small percentage and reallocates carefully. Everything becomes pre-planned. No guessing, no gambling, no emotional chaos. And here's something most people don't understand. You do not need to predict the exact top or bottom to become wealthy. In fact, trying to time everything usually destroys performance. The greatest investors in the world are not magical fortune tellers. They simply own exceptional businesses for very long periods of time while continuing to execute their systems through volatility. Meanwhile, retail investors keep searching for shortcuts. Every week they ask, what stock should I buy now? That's the wrong question. The right question is, what investing process can I follow for the next 20 years without self-destructing emotionally? Because one good stock pick won't save you if your mindset is broken. Right now the market is entering another period where emotions are running wild. Some people think the economy is unstoppable. Others think a crash is around the corner. Social media is filled with fear, greed, panic, euphoria, and endless predictions. But the truth is, most of that noise does not matter long term. Businesses matter, earnings matter, cash flow matters, innovation matters. Great companies continue building regardless of headlines. And over the next decade, the companies leading AI, data infrastructure, defense technology, robotics, energy systems, and automation are going to create unbelievable wealth. But most people still won't benefit because they'll sabotage themselves emotionally. Somewhere along the journey, they'll panic during corrections. They'll get impatient during sideways periods. They'll chase shiny new trends instead of sticking to a framework. That's why the real edge today is not intelligence. Information is everywhere. Everybody has access to data now. The real edge is emotional discipline combined with a repeatable investing system. If you can master that, you are already ahead of the majority of investors. At the end of the day, the market rewards patience more than prediction. The people who build life-changing wealth are usually not the loudest people online. They are the quiet investors consistently buying quality assets while everybody else keeps reacting emotionally to short-term noise. They understand that wealth is built slowly, then suddenly, and by the time the crowd realizes what's happened, the opportunity is already gone. So if you want to win in this market, stop chasing excitement. Stop looking for certainty. Stop depending on influencers to tell you what to think. Build a system. Build conviction. Learn how businesses actually work. And most importantly, learn how to stay calm while everybody else loses their minds. Because there is where generational wealth is created.